What's up guys, William Ryan here, back with another video. And in this video, I'm going to be talking about the one characteristic all parabolic price moves have. Okay, and so if you guys have been following along on this channel, you guys know I trade ICT concepts. I do believe that they are the algorithm, 1000%. There's without a doubt in my mind that they are. I've been trading ICT for almost 5 years now, and his concepts are the truth, without a doubt in my mind. If you're new to ICT, you need to study his content, study this YouTube channel, and your trading will drastically improve if you put in the work. And so the one characteristic that'll help you out with catching these parabolic price moves is the William percent R. Okay, my optimal advanced setup, very, very simple. Okay, that I teach here on this YouTube channel. Okay, so I typically use the fair value gap and a balanced price range, either in the order block, okay, or on the opposite side of the curve. The next thing is an order block or a breaker block, but typically for me, I only use the order block. That's what my eye gravitates to. And the last thing is the William percent R. So this is what we're going to be focusing on in this video, and just showing you guys some examples and some proof that this tool is the real deal coupled with ICT concepts. Okay, and so within a market maker model, guys, right, and within price delivery itself, we have consolidation, expansion, retracement, and reversal. Those are the four things that price can do. And so we want to capture the lowest resistance liquidity runs in a market maker model. Okay, that is my personal goal. I want to participate in the easiest, the smoothest, the moves that have the most volume. That's where I want to be a participant in the marketplace. Okay, I don't want to be in chop. I don't want to be in high resistance liquidity runs. I want to be in the cleanest moves. And so the charts that I'm going to show you guys today, okay, these moves have happened recently, or relatively recently, and are the best moves within their market maker models. Okay, and so here we're looking at soybeans, right? So we have a consolidation, we expand higher, okay, we price in a high, we retrace, we expand, okay, then we begin to reverse, right? We obviously consolidate above these highs, and then we start to break down. And so I believe in this market maker model where we're at right now, I do think we could easily come down here to these equal lows and take out this consolidation. But I think for the time being, our first target will be these equal lows and this fair value gap down here. And so how could have you been a participant in this move lower so far, right? So using the William percent R, okay, we can find the best optimal trade entries or the best second leg of distribution or accumulation within a market maker model. And so here we have price compressing, right? So we know that price goes from contraction to expansion, from contraction to expansion. And so here we have the internal model, power of three. So we have consolidation, retracement, and then we have expansion. Okay, and so I think in a month, in the next 4 weeks to 2 months, I do believe we're going to be down in this fair value gap. And maybe later on in another video, I will cover that and see if it comes to fruition. If you guys go back to actually one of my first videos, I called massive moves in the grains markets, okay, soybeans, wheat, and corn, using this exact same tool. Okay, if you guys want to go check that out, I highly recommend it. It's actually one of my first videos, right? So going back to the William percent R, right? The William percent R gives us an idea of when the change of state of delivery is going to happen, right? And what I mean by change of state of delivery is talking about those four key price deliveries that we just talked about. So we have the consolidation, the expansion, the retracement, and reversal. So that's what I refer to when I say change in state of delivery. Okay? So price here is coming into a optimal trade entry. We're going to take it from the bodies. Okay, price comes right into equilibrium. Okay, tapping the lower end of that fair value gap, right? At the same time, the Williams percent R is taking out this respective high. So here we have this high, and it's reflected here in the Williams percent R. Okay? So when price comes up into a premium market and we're looking for lower prices, how do we know which PD arrays are going to get utilized by smart money to accumulate shorts? This tool right here, the Williams percent R. Okay? So the Williams percent R comes up, takes out this respective high. At the same time, price is coming in to a premium. Okay, and this is how I catch highs and lows of the marketplace, guys. If you guys have seen my videos, my execution videos, I highly recommend you check them out. If you're new to the channel, you can see live executions in real time. Okay, so very, very beautiful setup here. This is on a weekly chart. And when we have this, guys, in a weekly chart, we have a lot of room to capitalize on the upcoming price swing. Okay, so if you guys can visualize this and see this and ingrain this fractal in your head, it's going to give you more opportunity. Okay, when we hop down to a lower time frame, you're looking for this exact same thing. Okay, you're going to have very minimal drawdown. Okay, you're going to be in the lowest resistance liquidity runs within a market maker model, and it's really going to help your P&L, your confidence, and your psychology as well. Very, 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 very important tool, not only for catching parabolic moves, but also for your mind, your psychology, and your risk management as well. The next chart we're going to go to is the NASDAQ. Same thing here, guys. You're going to notice this chart looks the exact same. We're in an 8-hour chart here. And I actually want you guys to look at this chart right now and look at the most parabolic price move within this price swing, or within this market maker model that we have. Okay, this is the most parabolic price swing, right? So when we look at this price swing, okay, what do you notice about the most parabolic price swings in any chart? Realistically, you're going to find this, guys, I promise you. So we have fair value gap, order block, same thing like soybeans. Okay, except in this scenario here, we've completely filled in this gap. I would have preferred to see it come to consequent encroachment, but nonetheless, we come up into a premium. Okay, right into that sweet spot. This is OTE. Okay, so this is the 61.8, and this is the 70.5. Perfectly. Okay, before selling off. But what is this video about, guys? What are we talking about? We're talking about the good old Williams percent R by Larry Williams. Same thing in soybeans. We have the same characteristic here. So price is rallying up into a premium market. Okay, at the same time, the Williams percent R is diverging. We're failing to take out this high in the price chart, but in the Williams percent R, we're taking this out. Okay, so what does that mean to us? What is the significance of this here in price and in the indicator? It indicates to us a change in state of delivery. Boom, we come up here, we leave here right away. Okay, this is a massive move, guys. It's huge. Within this whole chart here, this is the biggest move within the chart. The cleanest, the biggest, and the easiest to predict using this tool. Very, very beautiful setup. Okay, very, very beautiful. We also have a balanced price range over here with this breaker. Okay, aiding in our confluence to go short. Beautiful, beautiful price move. Okay, I'm going to show you guys another parabolic price move, and you're not going to want to go anywhere for this. If you guys have been watching to the end of this video, okay, this right here is absolutely beautiful. So we're going to pop out to a weekly chart, and we have layered liquidity here on the VIX. Okay, so equal highs and equal lows, they're going to be targets, right? And we haven't had this big of a move in the VIX since 2020. So it's been 4 years, right? And so I wonder what characteristic is going to be there for this massive, massive price move. Let's take a look. The William percent R. Okay, guys, it stays the same. The internal model, you have a balanced price range within a order block. Okay, fair value gap. You have contraction, okay, consolidation, retracement, expansion, and the William percent R. Okay, this is the indicator that you're going to want to use if you're trying to find big, parabolic, in-your-face price moves. Like, you got to ask yourself, do you want to be a part of price moves like this? And I'm not talking about the RR. Okay, my RR is pretty much fixed. I'm still working on that. That's a part of my process in my own development as a trader. Okay, trying different things out, tweaking different things. But I'm talking about the velocity and the speed in which price delivers. Do you not want to be a part of trades like this? I sure do. Right? I'd much rather be in a position where I get immediate feedback. Okay, and I'm not second guessing, and it also gives me an opportunity to manage my trade correctly and lose less than anticipated. Like, I'm telling you guys, this tool right here is very, very useful. Okay, I understand, ICT talks a lot about just pure price action, but if you're a developing trader and you're still trying to find your model, and you're using the internal model, okay, and you're getting chopped up, you're getting tagged out a lot, you're getting chopped up, you're getting stopped out, you're picking the wrong direction, you're not in sync with order flow. This right here is going to help you tremendously, as it's helped me and many others on this YouTube channel. And so we're going to check out one more chart before I close this video. And we're going to go back to the NASDAQ, and we're actually going to look at a trade that I took today. So we're just going to get everything off the chart here. I want you guys to look at the price action in here. Okay, what do you guys see? We have two balanced price ranges. One here, and look at the William percent R for me. Why do you think this massive move occurred? Or this spike of volume came into the marketplace? The William percent R. Okay. This tool is elite. It's elite. I understand price action is king. But this right here gives you more understanding, more context, and it leads you in the direction of the most parabolic price moves within any market maker model. Okay, this is where you catch second leg distribution. This is where you catch those moves that can really change your trading, right? And so you can see here, I executed this trade right here. Okay, and we got out above the liquidity and the fair value gap, right? So if you guys want to catch more parabolic price moves and low resistance liquidity runs, you guys are definitely going to want to use this tool and start back testing and slowly start implementing it. If you guys have any questions about this tool and about how I trade, feel free to leave a comment or DM me on Instagram and we can chat on there. And until next time, guys, good luck and good trading.